Hello traders, this is Joanne with Succeed in Forex. Welcome to our Forex news broadcast for Tuesday, May the 6th, 2008. Headlines out of Switzerland this morning read, dollar fell as oil prices hit record high and worries for more corporate fallout from credit crunch. The dollar fell on Monday for the first time in 3 sessions as oil prices hit a record high, sparking debate about the strength of the U.S. economy. The U.S. services sector grew in April for the first time in 4 months, according to a report on Monday. That news was overshadowed by a Federal Reserve survey showing the banking sector remained in grips of a credit crunch. After trimming interest rates to 2% last week, the Federal Reserve hinted it may move to the sidelines and pause its aggressive 7-month easing campaign that has reduced the dollar's appeal to global investors. But while data showed the U.S. economy continued to eke out modest growth in the first 3 months of 2008, investors remain wary with oil at a fresh record high above $120 a barrel and more corporate fallout expected from the credit crunch. Yesterday's trading volumes were lighter than usual, with London and Tokyo closed for public holiday. The euro-dollar rose to 155.05, despite weaker than expected investor sentiments index in May. Investors are far more concerned with the expected trajectory of the European Central Bank's interest rate policy. With food and energy costs on the rise, ECB President Jean-Claude Trichet warned again on Monday of significant inflation risk, suggesting benchmark rates would likely stay fixed at 4% when the central bank meets on Thursday. Consumer prices in the Eurozone rose by 3.3% in the last 12 months, below the prior month's reading, but still well above ECB's target of about 2%. The Fed next meets on June 24th and 25th, and the federal funds futures contracts were on Monday pricing in just a 12% chance of another 25 basis points rate cut to 1.75%. The dollar was range-bound in the Asian session as markets lacked new information to stimulate it in any real direction. The euro-dollar trended upwards to 155.35 level in early trading after ECB President Trichet reiterated his warnings of a high inflation risk that still exists in the Eurozone, but reversed earlier gains as the session progressed. The Australian dollar's strength waned as the RBA unexpectedly maintained its neutral bias after holding rates steady. The Aussie dollar fell sharply to 94.23 and continued to come under selling pressure. Trading continued to be light as the holiday season was still in full swing with Tokyo closed. Last night's comments from the Fed Chairman Bernanke that rising mortgage foreclosures may push home prices down further hit the dollar. Sterling was very quiet following the UK markets being closed on Monday. The pound was trading around 197.35 region, while against the euro it moved to 78.70 from 78.52 and was significantly higher than the low of 77.65 area seen last Friday. There is considerable pressure building on Prime Minister Brown to turn around his own personal reputation with the British public and revive the Labour Party's confidence after the hammering it took in last week's local election. Yesterday, the U.S. market was quiet as it closed down slightly on the day. Only 2 of the 10 sectors moved higher: materials at 1.5% and energy at 1%. These were the only 2 higher on the year. The main story of the day was Microsoft dropping its proposed enhanced bid for Yahoo. Oil prices closed higher near the 120 mark on the back of production disruptions in Nigeria and amid dollar weakness. As a result, energy companies rose after crude hit 120 a barrel. Mining stocks were also higher as other commodity prices rose. Asian stocks declined for the first time in 3 days. Financial companies were lower following the U.S. trading, along with the fact that the investors fear more write-downs. The RBA held rates at 7.25%. This was widely expected, but the markets were nevertheless surprised by the neutral stance the bank seemed to have taken. Markets have been pricing in another rate hike near term, but the probability shifted slightly after yesterday's statement. The RBA noted increasing price pressures, but pointed to slow domestic demand as a constraint of inflation. That concludes our news for today. Thank you for viewing. We hope that you find this helpful for your trading. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you'll find a link to our Traders Training Center, where our motto is Traders Helping Traders Succeed in Forex. You'll also find a link to our Yahoo forum, which is also called Succeed in Forex. Hope you'll be able to visit us there soon. We hope you'll be able to join us for our next broadcast. Until then, have a great trading day and happy pipping.